ever opened your mutual fund statement and thought, wait, can I actually lose money here? Or maybe you asked yourself, why am I seeing negative returns when everyone says mutual funds are safe for the long term? Well, here is the reality. Yes, mutual funds can give negative returns. But does that mean you should panic? Definitely not. Curious about why this happens and what it means for your hard-earned investments. In just a few minutes, we will clear up the mystery behind those tips in your fund's value and why they are often not as bad as they seem. Ready to dive in? First, market volatility. Equity mutual funds are funds invested in the stock market or subject to ups and downs. Stocks fluctuate and so does your fund. If the market has a bad day or even a bad few months, you may see temporary losses in your fund's value. But remember, volatility is often a short term. Then there is economic downturns. If the economy slows down, whether due to inflation or a recession, it can affect company profits and stock prices, which can drag down the value of your mutual fund. Now let's talk about sector specific risk. If a mutual fund is focused on a particular industry, say technology or energy, and that sector faces challenges, the whole fund can take a hit. For example, if tech companies experience a slowdown, your tech-focused fund might show negative returns. Bond funds also aren't immune. If interest rate rise, bond prices tend to fall, which means bond funds could generate negative returns. It's like a shisha. As one goes up, the other comes down. And finally, for those of you invested in debt funds, there is a credit risk. If a company or government that issued bonds in your funds defaults on their payments, it can lead to losses for the fund. This is particularly risky if the bonds get downgraded by rating agencies. But here is the silver lining. While short-term negative returns are possible, mutual funds, especially equity ones, are designed to grow over the long term. Think of it as a marathon, not a sprint. The key is patience and understanding that these dips are part of the game. So does it mean mutual funds are risky? Sure, but like anything worth having, it's all about playing the long game. Stick around, keep calm, and remember why you invested in the first place.
Hope you liked this video. If you have any questions related to this or any other investment option or related to your financial goals, don't hesitate to book a free appointment with our financial experts. The link to the free booking is given in the description below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description. If you like this video, hit like and share it with your social circle. If you haven't subscribed our YouTube channel so far, please do subscribe. Thanks for watching.